Good evening, everyone. Welcome to today's session of After Hours with William O'Neill India, dated October 3, 2022. So, before we go ahead, I'd like to give a small disclaimer that any security that we might discuss in today's session should not be considered as a buy or sell recommendation, and we'll be just doing it for educational purpose. So talking about your today's action, so had a gap down opening and then Nifty made a strong recovery and was trading above the 200 DMA as well. So it was trading of the 200 DMA above the 17,000 level as well, near the 17,100 level. Then came under some kind of selling pressure during the first hour itself, first hour, first 1.5 hour, and then made some kind of intermittent recovery during in the first half of the session as well to trade around 17,050. I'll do some chart annotations. So yeah, so it made some kind of recovery, went up till the 17,050. But as your European markets opened, the Dow futures opened, it went straight down, and that's what happened. Like at the end, it declined by around 1.2, 1.3% for the day. The volumes was not as high as that of Friday, but it was still around the average volume mark, the 3 month average volume mark. If you look at it, around 278, 279, it was around that mark. And by the end of the day, it breached its 200 DMA as well. So probably not a good sign and not a good session if you talk about from today's perspective. But if you talk about yesterday's lows from the William O'Neill perspective, what's happening here? If you talk about the yesterday's low, that if you talk about this line, it's probably the 100 DMA line that Nifty probably beautifully held in the Friday session when even your it was more or less priced in by the market, where your RBI hiked interest rates by around 50 bips in during the Friday session, and Nifty rebounded sharply, which was more or less priced in a hike of around 35 to 50 bips. It was probably what the market was expecting from RBI to do it, as probably the global central banks was on a rate hike spree. So even RBI, in order to tame the inflation, plus to probably uh, control the outflow from the bond market in India as well, had to take the interest rate higher probably to control the differential. So now talking on the O'Neill perspective, like on Friday we counted day one of a rally attempt. So like we want Nifty to stay above the Friday's lows for at least three consecutive session to probably take the market to a rally attempt. So even today after the selling pressure as well, it breached the 200 DMA, but the lows were still held. So that is a good sign. And if even one more day consecutively, if Nifty holds above these Friday's lows, then probably we'll take the market status to rally attempt. And then if from there, if we get a follow through date, that is an up move of 1.5% or higher on volumes higher than the previous day, then we will take the market status to confirmed uptrend. But overall, if you look at it, comparing to the other global markets, the emerging markets and the developed markets as well, your Indian markets, that is the Nifty, is holding pretty well. But we still not there. The market is still volatile, still choppy. If we look at it, relatively, we are outperforming other global equity markets. But till the point in time, we are not in confirmed uptrend. And till the point in time, some key moving averages such as your 200 DMA, your 50 DMA is not reclaimed. Probably till that time, and there can be some kind of selling pressure, and probably near this previous highs, like even this time as well, we found selling pressure around the previous level. If you look at it, it was a very smooth rally from 15,183 to the 18,000 levels. But it was, as you can see, Nifty wasn't able to break those highs for two consecutive times. Like it came back, it retested 21 DM, and then again tried to move ahead, but it found resistance or overhead supply around these levels. That is the previous highs level. So let's see what the market takes us in the next few weeks. But one thing certain, that some kind of volatility is likely to stay. If we talk about the top gainers and losers for the day, the short gainer for today was ONGC, gained around 4.6% as your crude oil jumped by around 4% today, as OPEC Plus announced that they'll cut their supply of around 1 million barrels per day. That is the biggest cut since the COVID-19. So if we talk, the other notable gainers were from the defensives, that is your Dr. Reddy, your suppliers, they gained around 1.9 and 1.4%. BPCL gained by around 1.3% and Coal India by 1.2%. Adani Enterprises was the biggest loser as it gained by, lost by around 8.4%. Aisha Motors declined by around 5.4%. Adani Ports by 4.4%, Tata Consumers by 3.1%, and Maruti by 2.9%. So talking about the sectors, as you can see, only one sector has been in green. That is your defense, one of the defensive sectors. That is the pharma sector, and even probably those were some of the stocks that were probably in the green space or probably in the gaining space in the Nifty as well. So it was the only sector that gained by around 1.1%. If we look at all the other sectors, they were on a declining spree. The most that declined were the metals. The metals declined by around 3%, PSU banks by 2.7%, and similarly, your auto declined by 2% as well. The biggest heavyweight sector in Nifty, that is your Nifty Bank, also declined by around 1.6%. So if you talk about the global macro data, probably the manufacturing PMI data from US is probably the most important one. The previous month's reading was around 52.8, and the expected reading is around 52.5 for the manufacturing PMI from US. So talking about manufacturing PMI itself, talking about key news, the UK September final manufacturing PMI came at 47.4 versus previous month of 47.3, and estimate of 48.5. So very close to the estimate if we talk about it. Now talking on the company front, the NICA board approved bonus issue of 5 shares for every 1 share, and that probably the shares catapulted on this bonus share issue. Even Bharat Gear's board approved bonus shares of 1 share for every 2 share held. Steel Strip Wheels has achieved a net turnover of 359.78 crores in September 22 versus 301.21 in the same month last year, and registering a growth of 19.45% YOY. Federal Bank's CASA ratio improved to 25 bips YOY to 36.41%, and gross advances increased by 19.4% to 1,63,956 crore. The other bank, the IDFC First Bank, released its business update for September quarter, and the fund assets grew by around 24.8% YOY to 1,45,332 crores. CASA deposits grew by 37% to 63,378 crores. So probably that's it from our side. I mean, it's good to remain on the sideline and follow the William O'Neill strategy and be rules compliant till the point in time market continue to remain in downtrend. And let's not try catching a falling knife and remain on the sides and probably preserve our cash till the point in time we get more opportunities to enter into the market, as probably when the market enters into a confirmed uptrend. So thank you, and do stay tuned to the after hours space, and as well as the pre-bell space, pre-bell at 8:45 a.m. sharp and after hours at 4:30 p.m. sharp every day for you. Thank you.